Woo! It is party time in the house with Michael Block. Real cool that you're joining me this evening. 8 p.m. Eastern time. And just so you know, no one ever does live webinars anymore because they're really stressful from a prep and a technical standpoint. But we're doing a live webinar because it is, what day is it? It's the 10th of January, 8 p.m. Eastern. I'm so glad you are joining me. So if you're just joining me now, there's a chat box on the right or on your phone. It's going to be on the bottom. So say hello and let me know where you're calling in from. So let me know. Type in the chat box where you're calling in from. And we're going to wait just a minute here, let people to get on. Oh, my gosh, we already have almost 200 people on. All right. Let me know where you're dialing in from, calling in from. If you have any kind of, hey, Daniel in Boca Raton. Lovely. Very lovely. Hey, Jim, Corey. Hi, you guys. It's fantastic. Jeff from Atlanta. Hey, how's it going? Yes. Hey, Nathan from Orlando. Very nice. Tim from Tampa. A lot of Florida here. Daryl. Hey, how's it going? Patrick from Harrington. Gabrielle. Hey, Robin. Local. Louie, how's it going? Dustin. Sasha. What's going on, Jason? It's good to see you guys. I'm glad you're here on time. I've trained you guys very well. Hey, Carl from San Francisco. Awesome. Glad you guys could be here. If for any reason there's any kind of hiccup, just hit refresh on your phone or your browser, and that should fix the problem. If it still persists, we'll have a replay. And remember, nothing that happens is my fault. All right. Hey, Bria from Pittsburgh, Roger from LA. That is awesome. That is awesome. All right, I'm gonna dial down my my party music here. All right. Okay, there's my party music all gone. Oh, that's kind of sad, isn't it? I love techno music, by the way. I don't listen to it all the time, but it's my favorite music. Kind of gets me psyched up a little bit. So really excited today to talk to you about apartment building investing, specifically on how to analyze deals. So before we get into it, real quick, so make sure that you focus on this. So this is going to be kind of more of a technical webinar, okay? We're going to be in spreadsheets a lot because I'm gonna walk you through a case study. You're going to watch me analyze a deal. You're going to look over my shoulder. How I'm going to analyze a deal. How do I come up with my first offer? And how do I then go into phase 2 analysis and actually make an offer and put it under contract? So we're gonna go through a scenario where we're gonna evaluate a 69-unit apartment building in Memphis. So we're gonna do that today. So again, in the meantime, this is a live conference. All right. So if things go wrong, again, it's never my fault. But hit refresh on the browser. If it really goes badly, there'll be a replay. If it goes really badly, I'll record it and put up a recording for you guys. Okay, that's like worst case scenario. So again, just hit refresh. We're gonna have a Q&A at the end. Okay, and I'll stay on, for as long as it takes to answer your questions. It's kind of free form for you guys. We have a huge turnout for this webinar, so I'm really pleased that you're here. So let me switch over to the screen share here, and we'll get going. We'll get going with the presentation. All right. So I'm going to make sure I share the right screen. All right. Can everybody hear me all right? Type yes in the chat box. Can you guys see the title screen, How to Analyze Apartment Deals and Make Offers? Type yes in the chat box. Okay. All right. Great. So that's working. So how to analyze apartment deals and make offers. And I'm going to show you how to do that in 10 minutes. But then we're going to go just a little bit deeper as well. Okay, so that's what we're going to do. A lot of you guys already know me already, which is great. So I won't talk a lot about me. Just suffice it to say, I have a background that's common to a lot of everyone. I was taught to get good grades, go to school, get a job, and that's what I did. I'll make a long story short. I have a computer science background, a programming background, and so joined the startup and we went IPO in March of 2000. It's a company called Web Methods. You can look it up. Put a bunch of money in my pocket. Read Rich Dad Poor Dad in 2004. Decided to quit my job and pursue this financial freedom dream. And so I did it all at once. I learned how to trade stocks and options. I flipped houses. I took an apartment building boot camp. But my big idea was restaurants. That was my big idea because I was surrounded by franchisees. And they said, yeah, it takes this much to open a restaurant, and you sit back and count the money. And I love that. That's what I did. Long story short, I subsequently lost my IPO millions in the restaurant experience and clawed myself out with real estate. And it was like so many people, single family house investing. In my case, it was flipping houses. And so that's kind of what I did until I discovered that the apartment buildings was much less work, made more money, and I could scale it. Started blogging about it, and kind of went from there. Today, we're one of the leading authorities on apartment building investing. And what's really cool is I personally controls $27 million in assets. But what's even cooler, to date, we've helped students purchase over 2,300 units valued at $86 million. My passion really is to help you guys become financially free, and the key to that is your first deal. So a key component of the first deal is really analysis. So what you're going to learn today is I'm going to show you the 10-minute offer in action with this this case study that I'm talking about, and then we're going to answer the questions. Okay, fine. So I have a 10-minute offer, but when someone invites me to submit a letter of intent, what is the most I can offer? How should I structure the deal, and how much, more importantly, will I get paid when I do the deal? All right, does that sound good? Does that sound like a good outline today? Type yes in the chat box if that sounds okay to you. All right, outstanding, fantastic. So real quick disclaimer. So I'm going to show you some examples of what I've done, what other people have done, and there's no guarantees that you're going to do the same thing. Okay, is that fair enough? So it's really up to you. The system definitely works. Multifamily is the right thing to do, but the results really depend on you. Can we agree on that? All right. So if we're good with that, let's keep going. All right. So let's start with a 10-minute offer. All right. And again, we're going to have a Q&A at the end. This whole thing is live, so stick around to the end. We'll do a Q&A end. We're going to focus, though, on analysis. There's so much. Last month, we did raising money. Next month, we're going to talk about the different ways you can actually get involved in this business, which is really, really exciting. But for now, we're going to do analysis. We're going to get into the 10-minute offer. So here's the process, and I'm going to show it to you in action. Okay. The first process, you get your marketing package. You get this from a broker. You get it from LoopNet. It doesn't matter. You get a marketing package. Then what you do is you adjust the net operating income that is provided to you in that marketing package. Hang on just a sec here. Let me sit down for a second here. Okay, so you're going to adjust the net operating income, and because you've adjusted the net operating income, you are going to adjust your price, right? Because as you know, commercial real estate is valued based on the net operating income. Does that make sense? Type yes in the chat box if that makes sense. Okay, so if the box makes more money, the box is worth more. Okay, so typically in a marketing package, they will overstate the income and they will understate the expenses. Therefore, overstating the net operating income, therefore asking a higher price. Okay, does that make sense? Okay, so we're going to adjust those two things, and then we're going to make an offer. All right, so let's see how this plays out. So I'm sharing my screen. We're going to go over and look at a spreadsheet. All right, now let me make sure you guys are seeing that spreadsheet. Yes, you are. Okay, outstanding. Okay, so we're going to spend a lot of time. It would help if you could see me. Hold on a sec. Let me fix this. All right. Oh, I meant to say, by the way, we have the chat enabled, but I need you guys to be nice. I want to introduce you to my good friend, Nick. He's kind of moderating the chat. Every once in a while, we get someone who's not nice to other people or me, and they will just be literally just kicked out. So be nice on the chat, or you'll be kicked out. Okay, so enough of that. We're going to spend a lot of time in spreadsheets, but that's okay. I don't want you to get overwhelmed because there's a lot of information on this training webinar, but trust me, it is easier than you think. And also, you can also find someone who's an Excel whiz in the worst case scenario. But 95% of the time, this is not that complicated because I want to make it really easy for you. Okay, so we're in a very quick 10-minute offer. So what we're going to do here is let me introduce you the deal. The deal is this. This is called Merton Manor. Merton Manor, 69 units in Memphis, Tennessee. So you see a nice little photo here. All right, so it looks pretty good. But this is a LoopNet listing. LoopNet listing is loopnet.com. You can, where the deals go to die, as they say, kind of jokingly. But this one is actually found on LoopNet. And probably one reason it was there was it was a semi-amateur listing broker, and the number to call didn't work. So it was sat in the market until Patrick Duffy found it. We'll talk about him a little bit later on. Now, I see you guys chatting away a little bit here, but you guys need to pay attention. Okay, you got to pay attention. I'm starting high level. I'm going to get detailed. So if you want to get good at this stuff, you really got to pay attention. So the asking price is 2.25. Okay, so you see that here. And you see the cap rate is 10.44. Okay, we're going to use that. We're also going to use the other information down here, which is basically the scheduled gross income, the effective gross income, the expenses, and the net operating income. All right. So I'm going to transfer these things to this little spreadsheet. So let me switch over real quick. Hold on. So we have the gross scheduled income is 474. Okay. That means that if everyone was paying the rent and they would collect it all the time, that's the number they would make. Okay. Now the next number is, so here's 474. We're in this here. Now, so that's the scheduled. Now, what they're saying here is that the effective gross income, the actual income that they're collecting, is actually less. It's 455. Okay, so we're going to put 455 here, which means that obviously the vacancy has got to be 19,000. Does that make sense? So they're supposed to collect this, but they're actually collecting that. So the vacancy or people not paying the rent is 19,000. Okay, 19,000 is 4% of that scheduled gross income. Does that make sense? Okay, so so if that's the case, then the effective income is 455, which is exactly what they say here, 455. Okay, so that's the income. Now expenses they're saying are 224. We'll put that right here. That's 49% of this number here, and that leaves us with an operating income of 231,000. Does that make sense? Okay, cool. Now, so far so good. Type yes if you're good. I won't get too upset for not paying attention, but does that make sense so far? Okay, so we got the effective income minus expenses equals the net operating income. Type yes. Okay, good. Now let's look at this cap rate. Okay, we have this cap rate. Let's go to the quick formula down here. The adjusted price or price in general is equal to the NOI divided by the cap rate. So price value, whatever, is NOI divided by cap rate. So the value therefore is, if the NOI is 231, right here, 231, if that's the case, and the cap rate provided by the broker is 10.44, which we had up here, okay, I had up here somewhere, then I plug that into my formula. 231 divided by 10.44 is 2.21, which explains the asking price. Okay, that's how they came up with the asking price of 2.25. Does that make sense? Type yes, guys. Yes, Carl, the cap rate is high. I'll get to that. And this is an example of where the asset was mispriced. It was underpriced. The version of the deal analyzer is, I think we're up to 2.71. This actually, what I'm going to show you is actually 2.61. So, but it doesn't matter. It doesn't matter. This tab is in the current SDA if you have the SDA. Anyway, so the point is now, that's how they came up with a 2.2. Now, here's the thing. Here's a 10-minute offer. The way the 10-minute offer works is that you use the same exact formula, but you use rule of thumb. And so the problem with it is that the vacancy rate at 4% is completely unrealistic. Okay? The vacancy rate really has got to be 10%. So what you do is you adjust the income that they provide. So they say, okay, the scheduled gross is 474, vacancy of 4%. And you go like, that's not right. 4% is low. You know what? It's actually 10%. I'm going to put 10% in here. Okay. And of course, what that does is it reduces my effective income. Okay. So then I look at my expenses. The expenses now are 53%. And the guideline, the rule of thumb is 50 to 55%. And it's in the range. So I'm not going to touch the expenses. Okay. But if the expenses were low, and a lot of numbers you get from a broker, the expenses are low. What you do then is you increase the expenses to 50 or 55%. Let's say it's 53%. And now you get an adjusted net operating income. Okay. So we went from a net operating income of 231 to 202. Okay. You see that? So 231 to 202. And the only thing we change is the vacancy rate, because we're using a rule of thumb, a 10% vacancy rate and expenses of 53%. You see that? Type yes. Make sure you're still awake. All right, cool. So now I have a lower NOI. Now that cap rate is provided by the broker. In this case, it's by the LoopNet listing, but oftentimes it's provided in the marketing brochure. If it's not, you ask the broker, hey, what cap rate are assets like this trading at? That's the words of the root. What cap rate are assets like this trading at? Okay, and they'll tell you. They'll tell you. And you use that number. It's very simple. And so now your adjusted price, guys, is 1.9. So they're asking 2.25. Now, I took a little longer. I took about 9 minutes. And most of the time, I spent explaining this to you. But you can plug this in probably within 60 seconds and come up with your 10-minute offer. All right? That's how easy this is. And so now what happens is you get back to the broker. Okay? You get back to the broker quickly and you say, hey, great deal. Love the cap rate, of course. Love the cap rate. You're asking 2.25, but I looked at your numbers. Now, 4% vacancy rate is a bit low in my experience. Wink, wink. It's really 10%. Your expenses are in line. But if I adjust your vacancy rate to 10%, and I take your cap rate that you provided, the valuation I'm getting is 1.9. Is there any flexibility from the seller, or probably not? There's your 10-minute offer, my friends. 10-minute offer. Now, you just made your offer, all right? Now, you've done 3 things. First of all, you didn't spend any more than 10 minutes, okay? I mean, it used to take me 4 hours to make an offer. Just ridiculous. And that's because I didn't have this technique or in the tools either, okay? Number 2, you got back to the broker quickly, which is key because 75% of the brokers, of the buyers on the broker's list never respond to a deal they send because I've asked them. So now you're in the top 25% on their buyers list. And number 3, you just made an offer. Is that cool? Type yes. Type yes if that's cool. Now Mike's asking about CapEx. Okay, let's save that for later. Let's save it for later, Mike. Okay, let's save it for later. But this is pretty much enough to see whether there is flexibility. Because here's what happens when you say to a broker, "Hey, I'm getting 1.9," and here's the thing you're doing. First of all, you are talking to the broker in terms of things they understand. And the things they understand are on the sheet right now. They understand income, expenses, NOI, cap rate, and price. That's it. So essentially, if you boil it down, they understand price, NOI, and cap rate. Those 3 things, okay? That's how you need to talk to a broker. You don't talk to a broker about equity splits with your investors, preferred return, or acquisition fee, or anything like that. It's totally irrelevant. So you got to talk to the brokers in this way. And that's kind of what you've done. Now, here's a situation. Now, let's say there's crickets on the other end. Well, look, you didn't waste more than 10 minutes of your life coming up with an offer. And that's fine. And that's fine. You stay in touch with the broker. Say, hey, look, let's just keep looking. Keep me on your list. Let's work the next deal. The broker's going to respect you because you took the time to analyze this deal and provided him feedback. All right. Now, the other thing that could happen is your broker could say, hey, you know what? Why don't you put something in writing? Okay. And now it gets a little more interesting. Okay. So if the buyer puts something in writing, you are now invited to make a more formal offer. Now what? Now what? Are you guys curious to see what you do now? Type yes in the type yes in the chat box if you're ready for the next one. Okay. So what happens now is we need to go one level deeper. Now the tool I'm going to use for this is a syndicated deal analyzer. Type SDA in the chat box if you currently have the SDA. Type SDA because I see a bunch of yeses. Type SDA. So the SDA, the Syndicate Deal Analyzer, is probably it is the most popular multifamily analysis tool on the planet. So I highly recommend that you use it. It's very, very affordable. It happens to be also mine, so I'm a little partial to it. But ask anyone, just Google it, and you'll see quickly. And the reason it's so popular is because it allows you to do the simple things very quickly, but it also allows you to do advanced things very quickly and accurately. And so that's the tool we're gonna use. Now you don't have to use that tool. You can create your own. I did let you know it took me 7 years to create this tool, or you can get someone else's tool. But the point is the principles I'm going to show you are the same. The bottom line is you need a strong financial module. But I'm going to show you the system for evaluating this deal. Sound good? Ready to go? Type yes. All right, cool. So what we're going to do first, the first step is we're going to be in the Scenarios tab. Scenarios tab really is there to help you make an offer. The first column is the actual seller provided, the seller financials. Okay, so the methodology is that the first column is we want to recreate the numbers we got from the broker. Now, if the broker provided us with actual numbers, we're going to use those. If the broker provided if the broker provided us with pro forma numbers, we're going to use that. The key at this phase is that you're going to use only you're going to use the numbers that are provided to you by the broker. And then we're going to get some other information to talk about in a second. But the first thing is we're basically going to recreate the 10-minute offer. Essentially, we're going to do the seller financials, and then we're going to do my version. Okay, so essentially recreate the numbers that the seller gave us, and then we're going to basically adjust it. And that was essentially our 10-minute offer. And then what we're going to do, phase 3, is we're going to model any kind of value add, any kind of value add we have in the deal. And I'll talk about what that is. And once we have the model, we have now defined what the pie is, and now we can slice it up. Now I can say, okay, how am I going to split this with my investors? How much should I pay myself? Okay, so but the first thing we got to do is we have to model the pie. Okay, pie modeling. We're going to do some pie modeling. All right, awesome. So first thing we're going to do is I'm going to show you what the seller provided. Okay, so let me show you exactly what the seller provided. Here is what the seller provided. You guys like that? Type yes or no if you like that. It's pretty cool, huh? Yeah, so seller old school. Seller was probably in his mid-70s. We asked him for the P&Ls and the rent roll, and this is what we get. So the good news is it was all accurate. The bad news is it was highly unusable because what am I going to do with this chicken scratch? So what we did next is we basically turned that into a spreadsheet, okay? So we turned this chicken scratch into this spreadsheet. So the gross potential rents are 453. Bottom line is he's collecting 457. So you go down here. I'm sorry. He's collecting 457 right here. Okay, you see at the top here. So trust me on this. 457. We recreated the spreadsheet. So now you can see quickly what he's actually doing. So once I have that, I'm going to go back into my scenarios tab, asking price, number of units, 64 units. And then I'm going to basically put in there what he provided us. So he's collecting 457. Okay, I'm going to make it a little bigger for you guys. Collecting 457. And then expenses, blah, 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 224 is the total. And the net operating income is 232. Okay, so that's column 1. All right, cool. Now, if I want to keep my, and by the way, the calculated cap rate is 10.34 here. It's a little off. I'm not sure exactly why. But you see here the valuation at 10.44 is 2.28. So it's really, really close to the asking price, okay? So now we can confirm that the seller's numbers are correct and we can understand how they came up with the price. So that's pretty neat, right? Now, next we're going to adjust my version, okay? So the thing I'm going to do is, I'm going to be kind. And the reason I'm kind and I'm keeping income the same is because I had a conversation with the broker about the chicken scratch that they provided. And you see here that these are deposits. Okay, deposits. And he's got some return checks. So this net deposit is actually what he's collecting. So I don't really know so he's actually collecting 457. So based on that, I can calculate the gross potential income. The bottom line, blah, 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 is he's actually collecting 457. If I back everything in, he's got a vacancy rate of about 4%, which is what I used earlier. Okay, so I'm not touching the income because I was told at this point that's what he's actually collecting. All right, great. I'm going to take that with a grain of salt, but I'm going to use that for the model. Now, the expenses, I'm going to make one adjustment. You guys are still with me? Type yes. You guys aren't watching TV, are you? Come on, stick with me here. Stick with me. This is important stuff. It's much easier than you think. Stay with me. All right, you guys are doing awesome, doing great. The only adjustment I want to make on the expenses is the real estate taxes. Okay, I'm going to do a little bit of research in phase 2, and the research I'm doing is I'm going to check the taxes and I'm going to talk to my property manager. Those are my 2 major sources. When I checked the taxes, I realized that the tax assessment was $1 million, but they're asking 2.2. Okay, so worst case scenario, if I buy this thing, the taxes could double. Okay, so I'm going to go from 32 and I'm going to essentially double it to 60,000. And I'm going to tell the broker this. I'm going to say, oh my gosh, great for these financials. That is fabulous. And now my net operating income is $204,000. Now, as it turns out, I'm applying a 10-minute offer again because now I have more information. Now I have the financials. So I'm going to do a kind of a secondary quick 10-minute offer because now I'm applying the 10.44, and I'm getting a 1.957 valuation, which, by the way, is darn close to my initial 10-minute offer. Okay, but I have more information. So this is an iteration. Okay, I have a little more information. I have some financials. I have the rent roll, and I'm going to iterate the process. Okay, now I'm not submitting an LOI yet. I'm doing a process. Okay, so I'm still in line with my initial 10-minute offer, which was 1.9. So I'm feeling pretty good now. So now what I want to do is I want to look at the actual value add. Now the value add here, what I was told from the broker, is that there is some room on the rents. Okay, the expenses look pretty good. They're 53%. That's actually not bad. It's actually not bad. A lot of times you see expenses reported at 45, or sometimes you see expenses like in the mid 60s. So there's a problem on the expense side. He doesn't appear to have a problem on the expense side, but there's some movement on the rents. Vacancy is about 94%. He doesn't have a vacancy problem, so that's not a problem. But there's some upside in the rents. So let me show you the rent roll. Rent roll is essentially a list of all the units, what type it is, and what rents they're getting. Okay. Now, the most of them are 2 bedrooms, and there's some 3s. So if you look at the 2 bedrooms, one of the things you notice immediately is you have one at $550 and one at $595. Why is that? Why is one $50 higher? Okay. Why is this one at $525? Okay, I don't know. Ask the broker. Well, why is there a difference in the units? Broker says, well, you know, the owner really doesn't want to push the rents too much because he doesn't want turnover. He wants to keep it full, and he's kind of old, and he's kind of he doesn't really want to push it as much. I love this kind of stuff because I have what's called a self-comping property. The self-comping property is where you have a difference in rents. Like this case, you have one at $525, or let's say $550, and you got some at $595. So my business plan essentially is to close the gap, is to get the 2 bedrooms to $595. Now, what do I have to do that? Again, could it be management? Could it be the condition of the units? I don't know that right now. Okay, I'm being told that some units look a little nicer than others. The property manager now is telling us that yes, those are reasonable rents, and clearly they're already getting them. So the really only question in my mind is, do I need to renovate the units? And if so, how much does that cost? So that is my big question. Okay. So that is the value add. Does that make sense? That's kind of the business plan. It's relatively simple. All right. So now what we're going to do is we're going to model this. So I'm going to go back to our trusted SDA, and I'm going to go in this P&L tab. The P&L tab is essentially a 10-year profit and loss projection. And now we're going to focus in on we're going to focus in on, we're going to go back to the scenarios tab, because I want to show you this worksheet. On the scenarios tab, on the right side, if I can ever get there, there is this rent this target rent analysis calculator. Okay. And what I'm doing is I'm taking the rent roll. Again, this is live, guys. It's not a canned thing. Stay with me, guys. I have this rent analysis projection sheet, and what I did is I took all the 2 bedrooms. There's 49 of them, and the average current rent is $554, and the 3 bedrooms average is $710. Okay, so if I average that out, it's $591. Okay, so $591 is the current average rents. If I take all the 2 bedrooms from an average rent of $554 to $595, the overall average rent is $618. You guys see that? Type yes. Okay. All right. Gotcha. So that's my business plan. The entire business plan in this example is I'm taking the rents from an average of $591 to an average of $618. Okay. So here's how I do it. I go to this P&L tab. The P&L tab, here's the average monthly rent. And you see all the cells in blue, you can change. Everything in black, don't change. Unless you are a Excel guru. Don't change the black cells. Okay, black cells, no touchy. Blue cells, touchy. So what I can do is I'm going from $591 to $618, and the reason I highlighted the cell is because I hard coded this value to $618. Okay, and then what I'm doing from that point on is I'm increasing the rents by 2% a year. Now, in most parts of the country, is 3%. Memphis is a little bit right now they've been growing the last 4 years, but I want to be conservative. I'm using 2%. So every year the rents go up by what is that? $12. Okay, not a lot. So that is the entire business plan, but it makes a huge difference. Okay, it makes a huge difference. All right. So that's my business plan. Now I have my scenarios tab again, and I have this other column called offer. This offer. This is my last column here. And so what I've done is I'm taking so what I'm doing now is I'm taking this offer column where and I'm taking the income down just a little bit. Okay, so I'm being a little more conservative. I want to start things off with income that's slightly lower because I want to use 5% vacancy instead of the 3.5, 4 that was provided here. And I also now the other thing I did is I asked my property management company for their pro forma. Actually, so let me go for column 3. Column 3 before I get to the offer. This is where your property manager comes into play, guys. Okay, this is why you need to build your team sooner, because what happens now is when I'm invited to make an LOI, things get a little more serious. So you can be the best, you can be a master of the SDA, okay? But the question is, how real are the numbers? How real are your assumptions behind the numbers? Okay, this is where your property manager comes to play, because your property manager can validate or invalidate your income. They can validate or invalidate your expenses. So what I've done here is I've said, hey, here's the property, here's a rent roll, here's a T12, give me your pro forma. And this is what they came back with, okay? So they kind of downplayed it just a little bit more on the income side. And by the way, we're using an average of 591 because we're assuming that we're just taking over what they've done. But the property manager agreed that within 18 months, we should be at the 618. The expenses they itemized, we don't have to go in there right now, but the expenses were about the same. And the major difference, guys, here's the major difference. Look at this number. And this number here, the payroll. Look at this payroll number. It's crazy. This payroll number is $88,000. And a management fee, by the way, is 0. And that's because he's self-managing it, but he's got $88,000. That's 20% of the income. Why does he have such high payroll? Well, it turns out he's got a full-time leasing manager and a full-time maintenance person. Like for 64 units, that's ridiculous. Meanwhile, our property manager will do it without payroll, but to do it for a 5% management fee. So we're saving like, oh my gosh, we're saving like 70 grand on payroll and management. No, that's not quite right. Yeah, about 60 grand. But here's the important thing. We are adding reserves right here. Okay, so deposit the replacement reserves means that every year, every month, you're putting money out of income into an escrow account, an emergency fund. Okay, every month. And over time, that account will grow and grow and grow and grow. And you use that account for emergencies. You use that account to replace the roofs in 5 years, to fix the parking lot. Okay, so in other words, it's a savings account. You need to have a savings account. And so the rule of thumb is $250 per unit per year. Okay, so that's what we're doing here. We take it out of cash flow. A lot of people don't do that. We do that. Okay, so the bottom line is because we're saving so much in payroll, but we're adding another 22,000, our expenses happen to be just about the same. So our NOI is 220. I'm sorry, NOI is 227, just a little bit lower. So at a 10.4 valuation, the valuation is actually slightly lower. So what we want to do is we want to take this information, and now we actually want to slice the pie. We want to see what are now we're getting into this other realm where we want to answer these questions. We want to answer the question, what's the most I can offer? And how should I structure the deal? And how much will you get paid? And what we've done right now is we've actually modeled the business plan. We've modeled our assumptions. We got purchase price. We got income. We have the 10-year projection. And now we have several levers we can play with, primarily the purchase price, but there's others as well. So what we're going to do of assumptions in it. The mortgage, what's the down payment? What are the capital reserves? What's the split with the investors? Okay, it has all these assumptions. And what it allows you to do is it allows you to populate, to drive the financial model through a pull down from the scenarios tab. Okay, so I can have multiple scenarios. And in fact, if you want to get crazy, there's even 8 other columns back here. there's various scenarios. What if I do this? What if I do that? What if I do this? Okay. So what I'm doing is I'm going to feed this model with the fourth column and an NOI of 227. And then I set it in year 2, the income to 618. That's the only thing I'm doing. I'm taking my per column, and then I'm increasing the average rents in year 2 to 618. Does that make sense? Okay. And so in the scenarios tab, then if I do that, if I do what I just described in the way I've done it, you can see here that the way I've done it, the average annual return is 24%. Now, is that a good return? Type yes or no. Here's the thing about that. Yeah, all right. So audio's dropping off. Apologize for again. Just remember, it's never my fault. Never my fault. Ha ha. Sorry about that. It sounds good to me. Anyway, hopefully you guys can rejoin quickly. So what's really important about this next step? Okay, you've modeled the pie. Okay, you've modeled the pie. But what's really important now, guys, is you have to get clear on what your investment criteria are. What this means typically is what are your return criteria? If you're raising money like you should, you got to be very clear about the returns you want to produce to your investors. Now, I want to show you this About tab. This About tab is a red light, green light system, okay? And notice how a lot of it is green. People who've used the SDA find this very useful. The reason I bring it up is just because there's some red in there does not mean you shouldn't be doing the deal. What I mean by that is this. Your investors could be very, very, very happy with a 12% average annual return, okay? Because they're not getting that kind of return over the long run anywhere else, okay? So they're like, my gosh, if you give me a return of 12%, I will invest with you all day long, okay? Now, those could be your investors, your family and friends investors. Now, my investors will yawn and tell me to fly a kite, okay? So my minimum average return has to be 16% or better, right? Does that make sense? So you have to figure out what the return is and the other thing is a cash on cash return. Cash on cash return is how much cash are you returning to your investors every single year, every single quarter, or every single month, right? Our goal is to have an average cash on cash return of 9% over the life of the project, but your investors might be happy with 5%. The point is you've got to poll your investors. What are they happy with? What are they looking for? And give them that. And that's going to change over time. The first deal you do is not going to be like the second or the third or the fourth, okay? So I want to make that very, very clear. You're going to see a lot of green boxes in here because the criteria I built into the SDA approximates what we look for on the Nighthawk deal desk, okay? We have this program where you can submit deals to us, okay? I'll tell you about that in a second, but you can submit deals to us. There's a process for that. And this shows you kind of what we look for. And we kind of look for the high returns, okay? But it doesn't mean that if you have a 12% return, you shouldn't do the deal. What I'm saying to you is you have to be very clear about what your investment criteria are, because that's how you define the line in the sand. So for this example, my line in the sand is I want a minimum average annual return of 16%, and I want a minimum average cash on cash return of 10%, okay? That's my investment criteria. It could be different for you, but I'm going to show you what this means. Okay. So I'm going back up here. Now the asking price is 2.5. Oh, 22 million. Maybe next time. 2.25 million. Now, if I were to pay asking price, the way I've modeled this thing, I'm going to have a return of 15%, and I'm going to have a average cash return of 10%. So here's the thing. The way I've modeled this thing, I could actually pay asking price, okay? And that is odd. That is very, very odd. Because as someone pointed out here on the chat, Joseph, I see the IRR. Hold that thought. The IRR is down here. Hold the thought about IRR. Okay. This is an unusual deal because I haven't seen a cap rate deal at 10% in ever. Like this deal we did 2 years ago. And I frankly, it was unprecedented. What happened is it was really mispriced. And I'll tell you right now that once we got it on the contract, about 5 weeks later, for some reason, the seller had an appraisal done and it came back at like 2.5 million. And he became very unresponsive. And in fact, at one point, he tried to buy us out of the contract because he realized the asset was underpriced. It normally doesn't happen this way, but I'm going to demonstrate you the process anyway. Okay, so maybe I'll make the average return maybe 17%. Make it a little more interesting. Okay, 17%. So anyway, so let's say it's 17%. Let's say you see the process. All right. So right now, if I were to pay asking price, I would be under my goal. So what I have multiple levers I can play with. I can play with the price. So let's play with the price. Let me go with let me go with 2 million even. So I go up here and I modify the 2 million. I make the price go down, which should make the returns go up. And now I'm at 22%. Okay. So I don't have to go down a lot. I went down $250,000. Let's go see where that break even is. 2.1, 19. I still got a ways to go. Let's go to 2.2. Okay. 16. So now I'm slightly under 17. You see that? So my line in the sand is got to be maybe 2.15. Something like that. You see the game we're playing, okay? All right, so let's say the line in the sand is 2 point. Let's say it's two even. Okay, so at 2 point. Sorry guys, I meant 2.2. Okay, so at 2.2, we're at just under 17%. So right now the way I've sliced it, I can't pay more than 2.2. Okay, now but there's a few other levers I can play with. Okay, so price is one. Let's say I'm going to make it up. Let's say my minimum average return, I want it to be 20%, just so you see the process. Okay. And so I can mess with the price. I can go down to 2.1. And now I'm at 19.35. Let me go to 21%. Now, the other thing I can do is following. I can, for example, I can give the investors a little bit more. Okay. So now I'm at 19%, but I want to be at 21. So I can give the investors more. So I just modify the investor equity. Let's say I give them a little more. I give them 75%. Now I'm at 21%. Okay, you see that? So I can do that. Or what I can do is I can go up here, my acquisition fee. Right now it's 3% of the purchase price, which is $63,000. Hey, that's pretty nice. That's pretty nice, right? So you get paid $63,000 at closing. That's nice, huh? That's really nice. Now, what I can do to get to the 21% that I want is I can pay myself less. So the cell is blue, so I can make it blue. And that reduces my acquisition fee. What does that do to my returns? Oh, 20.2. Okay, what else can I do? Okay, I'm paying myself an asset management fee of 1.5% of income collected for managing a deal. That's pretty cool. I'll show you what that looks like in a second. So let's say I eliminate that and I don't pay myself that. Now I'm at 21%. Now the deal works and I can pay $2.1 million is my line in the sand. You see how that works, guys? Type yes. The question is about the cap rate at resale. Okay, that cap rate at resale, that again will come from your broker. So if the broker tells you that the cap rate in the market is 8% or 8.5% or 7.5% or 6.5%, what I advise is that you add a half point to that, because in 5 years, the cap rates are probably going to be a bit higher. I don't know how much. If you can add a full point and the deal still works, that is really, really good. Okay. So ignore the cap rate at resale right now. When we got in this deal and we saw we had a 10% cap rate, we thought this was kind of like maybe a C- deal or a C deal, or maybe it was a really bad part of Memphis. And Memphis, by the way, has a huge variety of cap rates, all the way down from 5% to like 11%. The comps are all over the place, and that is because Memphis is a bit block by block almost. So you really have to study the comps. So at this point, we just said, my gosh, there's no way it's 10%. There was some comps around 7.5, 7, 8.5. So we said, let's be conservative. I'll say 9. Okay, so I don't want you guys to get into the weeds too much about the specific deal. I want you to understand the process. Does that make sense? And there's no way I can teach you the entire art of analyzing deals in an hour. Okay, but that's the process. So the point is this: now we have structured this deal where we have a 21% to our investors, and we're giving them 70%, and we're paying ourselves a 2% acquisition fee. Let's just back that off a little bit. I want to pay myself $3, 3%, and I want to pay myself an asset management fee, and we're down to 19%. Okay, so I'm making an offer 1.9, and my line in the sand right now is 2.1. Okay, so now I know what my line is, but I got to make sure that my offer gives me room to move up to 2.1. That's how black and white I can determine what my max offer is. Does that make sense? Is that pretty cool? Awesome. Now I've answered my other question, which is how should you structure the deal? Okay, the answer is the investors are going to get 70% of the deal, 7/30 split. Okay, and then the other question is how much will I get paid? Okay, let's look at that. So we have this cool returns tab, one of my favorite here, and it shows the investor returns up here. So for example, it shows the cash on cash return. It shows you what they get at the cash flow distributions and what they get at the end. And here it calculates. Let me hide these cells. It calculates the average annual return, which is 19%, and the average cash on cash is 11%. So this is a great looking deal by anyone's standards. Most deals aren't going to be that good. Again, I want you to understand the process. Now here's the cool thing. So here's your returns. Summary of projected manager cash flows and returns. So you get 30% of the deal, which means that you are entitled to about, average, what do we hear? About $35,000 per year. So that's divided by, it's like $3,000 a month. So a 64 unit deal, and you're getting $3,000 a month. And you're raising, what are we raising here? We're raising 800,000. Okay. We're raising $800,000 and you are getting $3,000 a month out of this. In year one, you're getting $63,000. And then you're also getting paid 1.5% of the cash flow. So you see that in the P&L tab. You see the asset management fee here. Okay, you see that every single year is 1.5% of the income collected. So you add all this stuff together, and you see that in the first year you make $100,000 off this little deal. And then from that point on, you're making about $4,000 a month, consisting of the cash flow and the asset management fees. And then year 5, when you sell this thing, you're getting a paycheck of $200,000. Now, let me ask you this: 64 unit deal, you're making $100,000 in the first year. I mean, if you did this deal, wouldn't that be enough to quit your job? I mean, type yes in the chat box. CapEx, good question. But type yes. Like literally, you could do one deal and quit your job with one deal. You have $63,000 acquisition fee. I mean, you got like a 6-month runway right there. And then you have cash flow coming in from the distributions and from the asset management fee. So your first year is like $100,000, and that's really how Patrick did it. Also, you got the guy who found this deal. It was enough for him to quit his job in that first deal because of that. So you get this giant check, and he gets a cash flow, and he quits it. And now it's a compounding effect because you've done your first deal, which triggers the law of the first deal. And now you're focused full time. You don't have a full-time job. So it really accelerates the process. And this is what's really, really exciting about that business. Anywho, CapEx. Yeah, this CapEx is right here. Repairs and reserves. There are no CapEx. Okay. So the broker told us there's no CapEx required. Now you got to take that with a grain of salt. And the grain of salt is this: the rule of thumb is that you want to put in, if you're told it requires no CapEx, you're going to put $1,000 per unit in CapEx. So in this case, that is 64,000. And then you're going to do 1 month's worth of operating income in there. So that's a total of $102,000. Now, if you put in, for example, only $50,000, put $50,000, then the SDA kind of barks all over. It goes, hey, something's not right. There's not enough repairs in there. So it kind of guides you a little bit. So that's the rule. That's the rule of thumb there. So that's exactly what we're doing. So the bottom line is this: now, I have now made a 10-minute offer. There was some flexibility, and we were invited to make an offer. We then determined what the most is we could offer. We determined that based on our criteria and the way we sliced the pie, we can offer no more than 2.1 million. Okay, we know it's a 70-30 split to the investors. And we know we're going to pay ourselves $63,000 at closing with a 1.5% asset management fee. So we've answered these questions in very, very short order. Is that pretty cool? Is that awesome? Type yes. Max allowable offer. That's exactly right, Thomas. Very much so. So here's the thing. So now you make the offer, okay? And you have this letter of intent. Letter of intent, or LOI, is just a 1 to 2 page plain English document that outlines the major terms of the offer. What's the purchase price? What's the down payment? How many days do you want due diligence? When are you going to close? Right? That's you put all that stuff in there, and it could be frankly an email. It could be written on a napkin. That is an LOI. People just overcomplicate these things. The reason you do an LOI, because the next step is to hand it to your attorney, okay? Because the attorney costs money. And if you keep changing the terms, it keeps getting more and more expensive. So you negotiate the LOI, and then both parties sign it, and then you hand the piece of paper to the attorney. And the attorney basically handles the rest, okay? So that's essentially the process is to understand what your max allowable offer is, and then to make the offer in the LOI. Okay, so what we covered today, here's the steps to your first deal. I just want to know where this falls in the overall thing. Analysis is kind of one. Being able to analyze properties is fundamental to this business. Absolutely fundamental. As you can see here, you need it. You need it for several reasons. Number one, you need it to have a high level of competence and confidence. You're using the right language. You know how commercial real estate is valued. You know things like cap rate, NOI. You can speak to, you need it to make offers. And in doing so, if you get good at analyzing the deals, it then boosts your confidence. This is why I created the SDA, and why in my course I spend so much time teaching you how to use the SDA. And everything I focus on is analyze deals, analyze deals, analyze deals. That's the one thing in getting started. Now, when you're good at that, the next thing you got to do is you got to build your team. I mentioned the property manager, critical component of your team. There's your mortgage broker is another component as well. Okay. The third thing is you got to generate deal flow. Okay. So you got to reach out to brokers. You got to get the LoopNet. You got to get deals to analyze. Then you got to get on a contract. So I got you all the way through LOI. The attorney is going to handle many of the details, but there's some nuances with contracts you got to worry about. Then there's due diligence. You got 21 to 30 days due diligence where you visit the property, you look at the financials, you look at the utilities, and you try to figure out if everything is what you were told would be. Is the condition right? Are the finances right? And every time you get new information, you put it in the model, you put it in the SDA. Does that change things material? If so, do you need to get out of the deal? Do you need to renegotiate the deal in some way? Okay. So due diligence is critical. You got to get the financing. You got to raise the money. We talked about that last time in our last webinar. Okay. And then there's the actual closing process. So, so those are the elements of the entire steps to your first deal. Now, we can't cover everything on this call, obviously, but this call is specifically about analysis. I just wanted you to see where it fits in the process, and it's foundational because the analysis touches every aspect of the buying process. Your financing, the terms of your financing, the interest rate, raising money, what do your investors want? Okay, that changes things. The due diligence will change things. So you need to be able to analyze properties. So I hope you've seen the process. That's the thing. And also the key really is that I find that when you see something in action, you can visualize it. You're like, that's not so hard. I can do that. I can do that. And that's really my goal on this training right now, is to show you, you can do this. Okay. You can do this. Now, there's no way I'm going to be able to cover all this on today's call. So I want to invite you. I want to invite you to continue your journey with me, because if you think that multifamily is the right thing for you where you are in your life, and it's the right thing to help you achieve your goals, if you're in that place, really the next step is you got to invest in yourself. People always ask me, well, should I invest in this and should I invest that? And they're really talking about, should I invest in the stock market? Should I invest in this kind of property? The best investment, hands down, I've seen it with myself and others, is to invest in yourself. It's the ROI is so humongous. It's amazing. So I invite you now, if you're in that, to really consider continuing the journey with me. So I'm just gonna outline this offer, this program I put together for you. I'm really excited about it. It's called The Ultimate Guide to Buying Apartment Buildings with Private Money. It's an online, it's a self-paced online course, and it covers every aspect of the buying process. And it's 8 hours of video where I teach you every possible aspect. You can download the audio so you can listen to it in the car, in the gym, and you can download a PDF so you can read it. Some people like to read it. So multimedia, everything you need. There's nothing held back in this course. We cover raising money. We cover analyzing deals. We cover selecting the right area, how to find the deals, how to build the A team, how to analyze deals, how to negotiate the offers, contracts, due diligence, financing the deal, how to manage the property, and how to exit the property. We do all those things in the course. So at my hourly rate of $1,000 an hour, and I don't even train anymore because I have a fantastic team of mentors. But at my hourly rate of $1,000, it's an $8,000 value. Just sit there in your living room or wherever and have me teach every aspect of apartment building investing. So I suggest you go through the whole thing cover to cover and then go back and use it as a reference guide. Included with the ultimate guide is, of course, the SDA, which we spent a lot of time doing. And you can actually buy it separately for $129. Just Google Syndicated Deal Analyzer and you buy it. And it's a critical component of this. And it underpins everything that we just did today. It comes with a very critical ultimate document library. Okay, we talked about legal contracts. So if you want to see what one looks like, it's in there. If you want to know what a due diligence checklist looks like, the ones we use, it's in there as well. Do you want to see what an operating agreement looks like so you can customize and send your attorney? We have that. In fact, we have 2 operating agreements in there. We have a sample private placement memorandum in there. So we have an extensive document library. It literally took me, I spent $11,000 on attorney's fees just on the documents that are in there, and not counting all of my time. That's an $11,000 value that's in that course. And I have 6 video case studies. So if you like what I did here today, okay, you're going to like this because I got 6 more. It's you looking over my shoulder, watching me analyze 6 deals. I go over the marketing package, I go over the analysis. There's even a property tour in there. Listen, if I were to show you how to do that, I would cost you $1,000 per deal. Hey, give me your deal. Let me analyze it for you. $1,000. I have 6 of them. So $6,000 value. So I have $25,000 value. I have the ultimate guide online course, the syndicated deal analyzer, the document library is $11,000, and then the case studies at $1,000 a piece, $25,000 value just in the ultimate guide that you get. So to take advantage of this stuff, though, it's not going to be $25,000. It's just at just under $2,000 is the investment today. So go to the michaelblank.com/deal2 to sign up right now, or you can call 855-855-2983. All right. Now, if you don't have the $2,000 right now, that's okay. You can get started for $475 right now. Okay. And just make 5 installments of $475. It's not a big deal. The point is, I want you guys to get started with it. It's really that important. Now, there's a few of you guys who have the SDAs already, or you might have you might already have an account of some sort. So when you go to the checkout, when you go to the michaelblank.com/deal2, and you already have one of my products, it's gonna ask you to log in. Okay, you need to log in first. Click the login button and log in. Okay, and then go back to the michaelblank.com/deal2. Otherwise, the system is confused because it's trying to create a second account and it already exists. If you have a problem with that, just email us at support@themichaelblank.com. And Stephanie will walk you through it. I just want to tell you that because sometimes it's not that easy. Anyway, now you might be concerned about the time it takes, and this is a valid concern. But I want to tell you the story about Brad Tasha. Brad Tasha was working 50+ hours a week. And by the way, 100% of everyone who invests in this course, in this system, has a full-time job. But he had a particularly taxing one because he was a manager and he was on call a lot, even in the evenings, sometimes in the weekends. And he still got it done. He quit his job in 2 years. He's actually now one of our mentors, really, really great guy. So within 2 years of doing this on the side, he actually quit his job. So if he can do it with that kind of job he had, and it was pretty stressful, you can do it. Now, I want you to focus on one thing, okay? One thing, really, really important. I want you to focus on your first deal. You know, I talk about the law of the first deal a lot, and that's why I put out my book here, Financial Freedom with Real Estate Investing. Type yes in the chat box if you guys have read that. Type yes. I'd like to see. Anyway, I want you to focus on that. Forget about everything, the 101 steps. Just focus on your first deal. And here's the thing. I am maniacally, my mission is to help you do your first deal because I know if you do your first deal, the second and third will follow. And I know for sure you'll be financially free after that. I'm so positive. That's why I wrote the book. So I focus all of my resources at helping you do your first deal. That's what I'm really, really excited about. So to help you do that, I have some very, very excited bonuses for you I want to tell you about. One of the things I get a lot is, how can how can people take me seriously if I don't have a track record, I don't have any proof of funds. Okay, so as a bonus today, I have what I call my instant credibility in a box. Okay, if you need it, I will give you proof of funds, and you can use me as a bio and put me on on your advisory board. Is that pretty cool? $1,500. I don't know, worth at least $1,500. You take my 10 years of track record and you just get it. You get my proof of funds and you just get it. Okay. $1,500 value. Okay. You're going to get that if you invest in yourself on this call as well. The other thing I get is, Michael, what should I do? Like, okay, I get in this course, but then what should I do moving forward? And, you know, we do this with our mentoring students quite a bit, and we kind of provide them a roadmap. But we have this thing in this vision map and 90-day plan. So this is essentially, it tells you what to do this week, next week, 30 days, 90 days, 12 months leading up to your first deal. And it kind of breaks it down. So this is a $2,000 value that we're going to give you. And it's got a spreadsheet, and it's got about, 60 minutes of video that really shows you exactly what to do once you've done the course. Really excited about that. Now, the other thing also is, you might be wondering, well, what about, how do I know I'm doing this analysis thing right? So obviously you seem to know how the analysis is right, but how do I know I'm doing it right? And this is really why I created Dealmakers Mastermind. It's really there to help you become a deal analysis master. And so you have confidence in analyzing deals. So what it is, it's an access to an online community where you can connect with others. There's several hundred people on there. You can network, partner on deals. You get discounts off my live events. But most importantly, you upload your syndicated deal analyzer and you get feedback from one of our mentors. And they'll critique your analysis. You do that a handful of times and you get really, really good. Really, really good and very confident. It's $49 a month. It's very, very affordable. I'm going to give you the first month for free. And you can cancel in the first 30 days. Otherwise, it'll be just $49 a month. And you can cancel that part of it anytime you want. You get to keep the ultimate guide forever. Okay. It's just a Dealmaker Mastermind is essentially a support forum for you guys. And I want to show you what that is. And I'll give you the first month for free. The other benefit of the Dealmakers Mastermind is the Deal Desk. Okay, the Deal Desk is essentially a program where you can partner with us. You can send us the SDA, and if we like the deal, we'll partner with you and raise all the money. In fact, we've done this now 10 times, totaling 1,000 units through the Deal Desk. And I remember a couple of years ago, we had one of our lenders, and they're like, for $6,000, we will introduce you to our high net worth individuals if you let us do the loan. And I'm like, that's a pretty good deal, But here's the thing: they'll provide the introduction, but I still got to raise the money. I still got to pay. I got to build trust. I got to build rapport. How long is that going to take? Right? What I'm telling you is, I'll teach you how to do it, but if all else fails, I'm going to do it for you. I'm going to raise the money for you. Okay, $6,000 easily, Deal Desk. And by the way, no one else is doing this stuff to the degree that we're doing it. So here's Patrick. I spoke to Patrick before. Listen to what our friend Patrick has to say.
I closed on my first apartment deal in April 2017. It was a 69-unit deal that I submitted through Michael's Dealmaker Mastermind program. I submitted the deal, got feedback. Michael raised all of the equity needed to close. And after we closed, I cashed a nice acquisition check. About 2 weeks later, I had a 196 unit under contract, and I literally feel like the sky's the limit. I couldn't have done it without you, Michael, and I appreciate everything. Thank you so much.
Oh, yeah. Patrick's a total rock star. Bonus number 5, by the way, is the Financial Freedom Summit. The Financial Freedom Summit is a 2-day event in which you're going to experience what it's like to purchase an apartment building all the way from start to finish. In fact, if you come, the next event is going to be in a couple of weeks. January 25th to 27th is our next event. We do it twice a year. And the case study we're using is this exact one that I showed you. So you're going to get to know the 64, 69 unit. It's got 5 extra units. Long story. You're going to get very, very deep. So if you felt like this might have gone a little fast, you're not only going to get the analysis again, you're going to get the entire process, all the way from analyzing to making offers, raising money, financing. It is awesome. The only event of its kind in the world. It's normally $2,000 just by itself. And I'm going to give you 2 tickets for free tonight on this call. And again, that the next meeting is going to be in 2 weeks in Washington, D.C. Here's what Ross had to say.
Very well done, very well organized. Love the teaching. They make you go through a real world analysis to buy your first multifamily deal. The team here that Michael put together, I'm extremely impressed with. Not only do they bring real world experience, they also bring a peace of mind that helps you out with the anxiety of your first deal. So very happy, highly recommended, worth all the money and time that you invest into it.
So here's what you're getting. Here's what you're getting right now. We're getting the complete multimedia course, the syndicated analyzer, the document library, the case studies, $25,000, like we said before. And then here are the bonuses, guys. Okay. Instant credibility, $1,500. Vision map, 9-day plan, $2,000. First month of Dealmaker Mastermind, and then it's $49. You get that first month for free. Deal desk privileges, $6,000. And 2 tickets to the Financial Freedom is $2,000. So total value is $37,000. And you're getting that only for $2,000. Okay. I hope you can see this is an incredible. I want to overwhelm you with it's a no-brainer for you. So go to themichaelblank.com/deal2 and sign up right now. You can do a one-time payment and you save a couple $100 if you do it, or you can just do 5 installments of $475. Now we're going to do a Q&A in just a minute here, but I want you to feel really good about this decision you're making today, because I do have a 30-day unconditional money back guarantee. But unconditional, I mean, okay, there is no condition. You decide in 5, 6, 7 days it's not for you. You just contact us and we'll refund your money. It's not a big deal. I really am more interested in helping you transform your lives and much less in taking your money, frankly. Okay. And this is why, if you ask around, we have a really, really good reputation in the market. And if that's not for you, not a big deal. You just contact us. Now, I know a lot of you guys are thinking about it. You're really on the fence. But if you think about it, there really is no risk. You buy it right now. The credit card is charged. You crack it open, you look at it, you noodle over it, and then you decide. You can decide. There's really no risk, right? It's kind of like test driving a car. You drive it off the lot and you come back, and if you want, you can drop it off. If not, you buy it. You keep it. Now, I know that some of you guys are still kind of going, oh, should I do this? Should I do this? And I want to give you a fast action bonus for the first, let's see, how many people? We have a good number of people on, maybe for the first 10. So we'll do it for the first 10, okay? You guys want to hear what the bonus is? Type yes. Chat box. Okay, the bonus is going to be 2 laser coaching calls with me. And as I told you before, I don't actually do coaching anymore. I have really, really good coaches that do that. And the reason is it's just that there's too many and I can't do it. And I want to serve more of you guys and do more stuff like this. But for the first 10 to sign up, okay, listen up. For the first 10, you're going to get 2 laser coaching. Those are 2 30-minute calls with me. And I would suggest you use them, right at the start. And then before you start with a course, and then after you're done, and we'll set a 90-day plan, or you can do it after you get done with a course. We'll set your 90-day plan, and we'll check in again in 90 days, okay? So for the first 10 only, but you got to get on this call right now. You got to go to michaelblank.com/deal2. Now, if you have any issues at all, just contact support at themichaelblank.com or call that number 855-855-2983. If for any reason you're having trouble signing up, just email us saying, hey, I'm trying to sign up. I'm having trouble. Okay. I want to be one of the fast action bonus people. All right. Just let us know that that's your intention, that you're having trouble. Just it happened last time for one person for whatever reason. So just let us know so we can get you into that. Okay. So that's for the first 10 only. So we're going to do here a Q&A in just a little bit. I just want to give you just a summary of what you're getting tonight. Okay. The ultimate guide, syndicated deal analyzer, document library, case studies, and you're getting the 5 bonuses, the instant credibility box, vision map, Dealmaker Mastermind first month, deal desk, 2 tickets to the Financial Freedom Summit. If you can make it in 2 weeks, that's fabulous. If not, we'll do it again in October. Twice a year we do it. All right. And then for the first 10 only, though, the 2 laser coaching calls with me, total value of $37,000. Now, if you're thinking a bit that this, even the $2,000 is much, really look at this acquisition fee. I taught you about Patrick. His acquisition, but this is Philippe. He joined the program in May. 5 months later, he brought us an 80-unit deal. This is a deal desk deal. His share of the acquisition fee was $33,000. I mean, he invested $2,000 in the program, and he got a 15x return. All right, 15x, and that's just only his first deal. It doesn't even count the cash flow. Just amazing. You get your multiple return back just on your first deal alone. Here's Bruce. Bruce joined the program, And his first deal was a little bigger. It was a 138 unit deal. And then 6 months later, he did 110 units. 6 months later, he did an 80 unit deal. $15,000 per month in cash flow in 2 years. Now, that first deal he did, by the way, the 138 unit that he did, he sold that 6 months ago for $1 million profit to himself. This happened to be in Dallas, and he bought this thing like 2.5 years ago. He got an unsolicited offer. He had a 10-year plan, and he said, my gosh, Michael, what do I do? I said, Bruce, I don't know who's buying this thing. Maybe Chinese money. I don't know, but you got to sell that thing. So he made $1 million, and he had $15,000. I mean, that's just amazing. The power of multifamily is really, really amazing. And I want you to visualize this. I had the case study I showed you where, you know, that 69 unit deal, the 69 units because there was 5 other units that we had to buy. You see at the Financial Freedom Summit, it actually ended up being 69 units. I'm spoiling a spoiler a little bit, but it doesn't matter. $100,000 of income from that one deal in that first year. I mean, that's amazing. I want you guys to really think about it. We talked a lot about numbers. We talked about, you know, financial freedom, but really kind of boil it up a little bit more about what we're really trying to do. We're trying to get you out of your job. We're trying to secure your retirement, right? And what does that mean to you, right? It means that you could do whatever you want, whenever you want it. You could do it with, you know, with whomever you want. You can pay for your kids' college education. If you're concerned about retirement, you can take care of that. And I love this quote by Andy Stanley, though, because he says it is your direction, not intention, that determines your destination. Okay. And I love this because a lot of people want things. I want $1 million. I want to lose weight. I want to quit smoking. And we want everything, but what is our direction? In other words, what are we actually doing to get us there? And that's really what's important. I don't care what you tell me. I care about what you're doing. And so it's really, really important that you guys think about that. I want you to think about that, because if you want to be in a different place this time next year, you have to do something now. Okay, if you do something right now, like sign up for this program, you will be in a different place next year. I can guarantee that for you. It's very, very powerful. If you don't do anything, that's fine. You'll just be in the same place that you are this time next year. And if that's fine with you, it's not a problem. And maybe you learned some stuff. Maybe you're entertained a little bit. It's not a problem. But if you want to change your life, if you really want financial freedom, then say yes to this program right now. I want you to get started and go to michaelblank.com/deal2 and sign up. And these bonuses are really only available on this call. So I want you to sign up while we take questions on this call. So with that being said, I want you guys to ask your questions in the chat box. Nick, can you please mark the questions for me so I can see what those are? And I'm happy to answer your questions. And I already see the questions here. Give me a second here to go through them. If you asked your question a while ago, like 5 or 10 minutes ago, ask it again, because I have to scroll down pretty hard. I'm going to get up. I'm going to get out of my here. Awesome. So this is great that you guys are still on this call. There's a giant number of you guys on this call, which is just fantastic. I'm going to take your questions right now. I want to make sure that that my camera is adjusted though. There we go. Okay, I'm back on. So I'm happy to answer your questions. Here's the thing, but I don't want you guys to get in the weeds. You can ask me about cap rates. You can ask me about the market, and I will answer those questions, okay? But I don't want you to delay the decision. You got to decide right now, okay? I'm asking for the decision right now. Are you in or are you out? I'll answer your questions, but if you're in, go to sign up right now. And I'll still be here when you sign up. Trust me. I will still be here when I'm here. So let's take some questions here. All right. Thomas is asking, how often do you part the student through the deal desk? That's a great question. We do it a lot. Okay. We've done 10 deals right now. We have our 11th under contract. It's a pretty big one. Todd's in, Corey's in. Okay. Yeah. Type in if you're in. That's awesome. That's awesome. Thanks, guys. I appreciate it. We do it a lot. Now, having said that, because we get a lot of deals to the deal desk, we don't do every single deal. It does not mean you shouldn't do the deal. Okay. It does not mean that at all. Like for reasons I just talked about earlier as well. Okay. But and here's the other thing. I want you guys to learn how to raise money. In fact, we insist on in the deal desk, even if it's only $100,000, you are going to raise money. Carl's a coaching student. Awesome. You're already in. Okay, great. That's awesome. Let's see. What is is there a limit to how many? Is there a limit to how much you will fund? Well, I suppose there is. But we have a 545 unit under contract right now. It's a $24 million deal. We have to raise $8 million, and I think we can do it. So is there a limit? I don't know. I'm sure there is, but don't think of it that way. We put in some equity, Robert. Yes, that is right. Would this work for mobile home parks? That's funny you say that. The answer is yes. We actually there's a good number of people who use the SDA for mobile home parks, self-storage, mixed use. You just got to modify it because the line items are a little bit different. But the idea, the way you slice the pie, the process, the money raising process is exactly the same, but the details are a bit different. So mobile home parks are great, John. They're not my style, but there's plenty of people who do great with them. So it's pretty cool. Edward's asking, when it comes to hiring a team, who needs to be first? Property manager is definitely the first, and then mortgage broker. SDA is still version 2.7. I think it's 2.71. The difference in Ultimate Guide and this new guide. Okay, so good question. So there are some of you guys, a long time ago, we sold only the Ultimate Guide course. Okay, that's only the online system with the SDA, the core that I showed you. But it does not include all the other stuff. It doesn't include the deal desk, deal maker mastermind, the tickets to the Financial Front End Summit. It doesn't contain any of that. Okay, so here's the thing. Here's the thing. You will get a credit. So if you paid a while back, if you just have the Ultimate Guide course, you will get the credit for what that you purchased. Okay, so again, you log in and just do this. Contact support and say, hey, I'm already an Ultimate Guide customer. Send me the link to upgrade. There's a special link to upgrade. So we will give you the $9.97 credit for whatever you paid for it. And if you have the SDA, we'll give you $129 credit towards the purchase of this as well. Okay, but you're going to have to probably contact support. It's a little onerous, and I apologize for that. But Stephanie will send you a link that allows you to upgrade to get that credit. If you're afraid to get the fast action bonus, okay, buy the $2,000 program right now, and we'll refund you the difference later. Okay, we'll do that tomorrow. We do it all the time. So that's probably the best thing to do. Log into your portal, the SDA, the Ultimate Guide, if you already have it, and then go back to the michaelblank.com/deal2, make the purchase, spend the $19.97, $475, whatever it is, and then contact support so you get in. Okay, otherwise you might be on the 15th person, and we'll all be upset. And then contact support. Stephanie will verify that you're an SDA customer and then refund you the $129. Okay? Plan? All right. Awesome. Good stuff. Hey, Nick, when I answer a question, take the queue off. So, John, about the mobile home parks, we already addressed that one. That way I'm not going back here. Okay. Let's see here. Gary's asking, what is the best method to make an offer when there's no asking price provided? Okay. That's a great question. Do this. It happens sometimes, like on Marcus Millichap deals. They're like, well, whatever the market dictates, it's a bunch of horse manure, if you ask me. Call the broker and say this. Hey, this is great. I noticed there's no asking price. What's the whisper price? What's the whisper price? Okay. Use that language. That means that you're not. What's the whisper price? Meaning, what's the secret price I need to come at? Or you can say, hey, what price per unit are assets like this trading at? Or what price per unit do I need to be at? What price per unit do I need to come in at? You can ask both of those, and they'll tell you. They will tell you because they don't want to waste your time or their time. So that's how you solve that. All right, scrolling. Who else is in? Paul's in. Awesome. Thanks, guys. Type in if you're in. I love it. Thanks. I appreciate it. I can't look at the sales coming. I'm trying to answer your questions. So that's awesome. Mike's asking, hey, most brokers are giving expense at 40% or below. What is a realistic expense percentage for C-class property? So, Mike, maybe you missed the entire webinar. 50%. If you want to be a little more conservative, use 55%. Okay. All right. Let's see. Pete's asking, can you trust a cap rate from a broker, or is it better to get a cap rate from an appraiser? It depends on what phase, Pete, you're in the process. If you're a 10-minute offer, all you're going by is what the broker's telling you. If you're in the process of making LOI, okay, you might dig a little deeper. Okay. You might call another broker. An appraiser is great. Okay. Appraiser is great because they know exactly what the cap rates are. So that's a great idea. This deal is only for today, David. That is correct. Okay. Moshe is asking about the purchase of STA. How do we get the updated version? I think I just talked about that. Thank you for asking. I would say just log into your STA on the online course. If you can't log in, reset your password, log in, and then go to michaelblank.com/deal2, and then contact support tomorrow, and we'll refund you whatever you already paid. Okay. So I'm allowing you to kind of step up and get credit for what you already invested. All right. All right, Gary, I already answered that question. Nick, are you out there? Give me some cues, man. All right. Again, I'm going to answer your questions, but you guys decide right now to sign up. And I would really like to see you at the Financial Freedom Summit. That's in 2 weeks. It is an outstanding event. There's nothing like it in the world. And what people tell me is that their comfort zones expand exponentially and their confidence skyrockets. So it is awesome. All right. We already had that one. Good. David is asking, where can I get the book? It is on Amazon. Just type in real estate investing. It's bright yellow. Financial Freedom with real estate investing. Bright yellow. Can't miss it. Everybody else's cover is blue. So I'm not doing blue. I'm doing yellow. So, all right. Nick, give me some questions. All right. We already did that one. All right. If you asked a little whiles ago, Nick, I'm not looking at WhatsApp. Okay. I'm looking at the chat. Don't WhatsApp me. All right. I want you to cue it in the actual chat. So if you asked a question a little while ago, I didn't answer your question, go ahead and type it in again. So it pops up at the top of my screen. So Tash is asking, how are property inspections done in a complex with tenants? So there's a variety of ways you can do it. One way is you can do it through your property manager. Okay. If you've already led them to believe that they're going to get the job, they're going to do it. Okay. They're going to help you do it. They'll have a contractor deal. They'll walk the units. They'll give you a report and they'll tell you how much it's going to cost. So that's kind of the quote poor man's version. Better yet is to hire a professional property manager, property inspector. And you can get those from your brokers, get referrals from anyone. And that will cost you some money, but they'll be very, very, very thorough. So that's how you do that. Jeff's asking, how fast can we close a deal you like and want to do? Okay, so the deal desk has a pretty strict 90-day time frame. There was a point where we had like a, all cash fast close, like in the single family house days. And we tried it. It was a nightmare. I'm not doing it again. It was so stressful and it just didn't work. We have a process that takes a little bit of time. Okay. We have to, the first step really is that, so when you submit a deal to the deal desk, okay, you upload it onto the online forum. We use something called Slack for that. You get feedback from the mentor. They'll give you a thumbs up. You will then email the STA to an email alias. Okay. And then a series of paid coaching calls start. Okay. $350 an hour. And most of them are essentially coaching calls because the deal is actually not ready to be put under LOI. So, or you maybe haven't found your property manager yet, or you didn't follow what I put in the course essentially. Okay. Or you didn't check numbers with the property manager and there are assumptions that you made that were invalidated. So we're going to send you away. You do a bunch of work, you bring it back, second coaching call. We're going to invoice you for that. So typically deal desk calls would take anywhere between 1 and 5 hours. I think Patrick's call took like 1 hour because he was so daggone prepared, so super smart, and was so prepared and followed the course to a T. So it was very, very quick. Okay. So it takes some time to help you get to the point where the LOI gets accepted. That takes time. And then that takes the most time. And then what happens is, when we accept the deal, we work out a joint venture agreement that says, okay, you're going to get X% of the general partnership. You're going to do X, Y, Z. We're going to do X, Y, Z. We sign it. The paid coaching calls stop, and you essentially become a general partner. And we work that into the operating agreement. So that's how that works. So if you have a fast close, don't do it. Okay. We did get a deal desk call yesterday, by the way. She already had a contract. She's almost due diligence. She has to close in 30 days. And I said, sorry, can't do it. I said, what I suggest is the following. You should always do this. You should build in extensions in your contract, 30-day extensions, unlimited, ideally. Okay. If you follow the course, it's very, very important that you do that. And it's not so much because you can't raise the money. It's normally because of your lender. Lenders almost always take longer than they tell you they do. And if you don't have extensions, you could actually default on your contract and lose your deposit. The other thing it'll do is if you try to go out on your own and you tried it, and let's say your big partner fell through at the last minute, and then you bring it to the deal desk, we are not magicians, right? One day we'll create a $100 million fund and I'll just write you a check. But in the meantime, there's a process. So 90 days to answer your question. Coaching students, no. So no, mentoring students, and I'm not inviting you to the mentoring program, okay? I want you to focus on this. We have a mentoring program, okay? It's very expensive, but no, they're not build the deal desk. Okay, this is like the minimal thing without becoming a mentoring student. And mentoring is awesome. Okay, our mentoring program is awesome. I'm tempted to tell you, but I'm not going to do it right now at all. I want you to focus on this. Okay, you can always sign up and explore mentoring later. Don't get distracted with shiny objects. Focus on this. But no, they're not. Rick, coaching students are not built for the deal desk calls. Let's see. The SDA work for properties that are vacant or in distress. Yes, of course, David. Of course. Okay. Moshe is asking, can you explain in more detail the return sheet? Try to determine each investor's return based on a level of investment. So if you scroll a little bit down in the returns tab, it shows you the return based on $100,000 invested. And it's a blue cell, which means guess what? You can modify it. So if an investor invests $50,000, it'll show you the return for $50,000 and so on and so forth. So if you have an investor that's curious about that and they don't know what to do with a 10% cash on cash return or a 15% average annual return, you can tell them exactly, hey, if you invest $100,000, you're going to make this the first year, this the second year, you're going to make this average. It's all in the returns tab. So it's pretty cool. All right. Baron is asking, do you have a sample deal package that you can send to potential investors? So yes, the answer is yes. I have one in the Ultimate Guide course, but and you can use it, but you need to create your own, dude. Okay, because you have to make the sample deal package your own. It's got to be your first sample deal. It's got to be ideally a deal that you've analyzed, ideally a deal that you've seen. It's your deal. It helps you visualize that first deal. It's something that you're excited about. It's something, and you share that enthusiasm with your investors. But yes, I have a sample deal package so you see what it looks like, but not so you can give it to your investors. Okay, that makes no sense. Don't do that. All right, guys, give me some more questions here. There's still a bunch of you guys on here. So if you're sign up right now, don't forget to sign up, guys. I love all these questions. It's fantastic. Type in on your end if you're in. Type it in if you're in right now. I do not offer any kind of discounts. So sorry about that. Gary's asking, can the SCB be used on other asset classes? Yes, I answered that question. In fact, there's a good number of them that use it for mobile home parks, self-storage, assisted living facility. It does require you to change some of the line items, but the math works. And the customization is very light. But I would say if you're an Excel person or you have an inclination, you're good to go. If not, you can probably hire someone to make the changes for you. But it's a very, very complicated spreadsheet behind the scenes, but modifying it is very, very simple. Moshe's in. All right, man. Ask a question, you sign up. I like that. I should do it where if you ask a question, you got to sign up if you get it answered. All right, cool. All right. Tesh is asking, how many units should one think about hiring property manager versus self-managing? Any number of units, Tesh. I don't ever want you to self-manage. Okay. The only reason you would self-manage is if you really feel like you want to learn the business. Like if you have a hankering to learn the business, that's fine. Or if you want to create your own property management company. Okay. But I want you to be very, very intentional about that. I want you thinking that never, ever manage your own property. It will suck you dry. Your best use of your time, guys, is finding deals and raising money. That's it. It is not you managing property. It's not you doing repairs. It's not you calling contractors. That is not the best use of your time. Okay? So hopefully I answered that question very clearly. How much of your own money do you recommend investing in deals? It depends, Tim. Okay? It depends. It depends on your personal situation. What else are you going to do with the money? Are you going to stick in the stock market? It's not such a great idea. Okay, so what are you going to do with your money? Okay, you might as well invest in your own deals. It also makes your investors feel better if you have, quote, skin in the game. They like that. But we don't invest in every single deal. But again, where am I going to invest in my money? I'm not investing in someone else's deal unless it's with my 401k or my IRA. I'm investing in my own deals. So the answer is I tend to invest in my own deals. Yeah, exactly right. Awesome. Yeah, Louis asking, is it a good idea to send over your LOI and pre-approval before walking the units to show the broker you're not a waste of time? No, that was very bad. There's no pre-approval. Okay, it's not like single family house investing where you get a mortgage pre-approval. It's not like that at all. What you have to do, and you don't throw an LOI over the fence either. You only give them an LOI if they invite you to make an offer. And they're not going to invite you to make an offer if you think they're wasting your time. Okay, so the key to being taken seriously, guys, listen very carefully. You got to educate yourself. This is why I want you to sign up for this program. You can sign up with someone else's program. There's other programs out there. At the end of the day, I don't really care. You got to educate yourself so you don't sound like a newbie. That's very important, okay? And the second thing is you got to build your team. If you don't have a track record, you have to have your team, okay? Because you're going to, when you call a broker, and I have a fantastic script in the course, that if you use that script with confidence, they will never ask you for proof of funds. They will take you seriously, okay? Trust me on this, guys. You will not be asked for proof of funds if you follow this process. You build your team, and you have a strong property manager, a real estate attorney, a CPA, an advisory board. You really built your team the way I teach it, guys. You're not going to be asked for a proof of funds. Let's see. David is asking about, can you use some of the strategies that you teach with the SCA to do master leases? Yeah, sure. Absolutely. I mean, look, the SCA is essentially, it takes an income stream and calculates a return. That's really what it is, right? So the master lease is just another income stream. It's just structured a little bit differently. If you're going to do crazy stuff like that, okay, we do it all the time. The reason you can modify the SCA is because you always need to customize it. So if you're doing a master lease, you're going to probably end up customizing the SDA. So you have to have someone on your team that's at least somewhat familiar with Excel that can do it. Pete, is there a number of units in a complex that you recommend? Yes, 2. That's the minimum. Okay, duplex. That's the minimum, because now you're in a multifamily deal. It's not technically multifamily. It's actually 5 and over. But here's the thing. The bigger, the better, right? The bigger, the better. But here's the thing. The law of the first deal is real. It's not something I made up, because I have like 5 dozen podcast interviews that over and over again demonstrate the law of the first deal. And a lot of them start with duplexes. And then the duplex turns into a 10 unit. The 10 unit turns into a 30 unit. The 30 unit turns into a 100 unit. You have this progression. So if you can't wrap your head around a 10, 20, or 30 unit, then do a duplex, because it still triggers the law of the first deal. But having said that, try to push your comfort zone. Okay, this is why the Financial Freedom Summit is so valuable, because you go in there. I will bet you. I will ask you coming through the door. I'll say, hey, Pete, what is your current limit? What is your comfort zone? You'll tell me 5 units. I say, great. And I'll ask you again in 2 days later, and I will guarantee you your comfort zone will be 20 plus. I will guarantee it. So just this exercise alone will expand your comfort zone from 5 to 20. What's my favorite chapter from my book? Ha! Sean, I don't know. What's my favorite chapter? I don't know. You stumped me on that one. 7 steps. I don't know. I really like the case studies that I have in the beginning and the end of the book that show the law, the first law deal of the law, the first deal in action, because it's so amazing. It was so amazing to me when it came up opening, it kept happening again and again, that the first deal took so long, was so hard to do. And then within 1 to 2 years, like I will say 3 to 5 years, like the book says 3 to 5 years. But honestly, it doesn't take people that long. It takes them 1 to 2 years. And that was amazing to me. Is that it's even possible. There's no business. And there's no business in the world like this. I mean, I've done all kinds of stuff. I've flipped houses. I've done restaurants. I've done software startups. I've traded stocks and options. And there is no business in the world where I can have passive income covering my living expenses within 1 to 2 years. Like it doesn't exist. It just doesn't exist. And so that's probably my favorite part. And that's really why I enjoy the podcast of listening to these stories. And those are the most popular ones too. People love those podcasts because they're so inspiring. So anyway, Corey, Daniel's question. Daniel's question. Okay, I got it. I'll get to that in a second. Do you travel to inspect deals? Yes. Yes, I do travel to inspect deals. Okay, Daniel's question, Sasha. Big time investors like him are saying to be very careful investing in multifamily with the depressed cap rates and increasing interest rates. What are your thoughts? Great question. Man, this is awesome. So here's the thing. It's an interesting time. And let me tell you why I think this is the best time to get a multifamily. However, there's an asterisk next to that because there's also a warning. Let me first start with the warning. The warning is the following. Okay, everybody is sensing there's a market correction. In fact, we've already seen it. Stock market's down 2018, and a very who's concerned about? No, don't type yes. Do not type yes. You'll scroll all my questions down. Okay, a lot of you guys are concerned about the stock market, but you probably have money in the stock market. Okay. And there's a lot of fear out there right now, especially given 2018. And now in 2019, we have a lot of uncertainty. We have a lot of uncertainty in the White House administration, foreign policy. We don't really know what's going to happen. And when there's a lot of uncertainty, there's a lot of fear. And a lot of fear is not very good for the markets. So what's happening is that people are very concerned about the stock market. Now, interest rates are also going up. And if you see what the Fed did in December, they hiked interest rates up 4 times last year, 0.25% each, 1%. And in fact, a year ago, we were getting interest rate loans at 4.5%, now at 5.5%. The Fed was announced 3% interest hikes in 2019, and in December dialed it down to 2 with very soft language. So that means that it's probably going to be 1 or 2 times another half point. Trump, of course, doesn't want interest rates to go up because he's a real estate guy as well. Now, interest rates offset inflation, right? If there's a lot of inflation, interest rates kind of keep that in check, but we don't really have a lot of inflation. The economy is still growing, but it's not like gangbuster. So there's a lot of doubt in my mind that interest rates are really going to go up to 10%, 12%. Though, having said that, interest rates, of course, historically are historic lows, so they've got to go up. The question is over what time period? That's the question. But we're expecting interest rates to go up maybe another 0.5% over the next 12 months. And we worked that into our underwriting. Okay. We worked that into our underwriting. So that's one thing. Cap rates. As interest rates go up, cap rates typically go up as well. Why? Because when interest rates go up, returns go down. Okay. But in order to maintain my returns, I have to pay less for it, which means my cap rates are higher. Makes a lot of sense. However, interest rates went up by 1%. What did cap rates do? They stayed the same. I would say they even went down a little bit. Now that's nuts. That's really crazy stuff. Why did the cap rate stay the same or possibly go down a little bit? Why is that? Because of the uncertain stock market. Uncertainty stock market, people are pulling their money and go, what do I do? Oh, I know. I'll invest it in real estate, the safest place I can put it. I have a lot of international people trying to pull their money out of China, out of Russia, because of the uncertainty. And they want to park it in U.S. real estate. They care much less about returns. They just want to make sure it doesn't go away in 5 years. So they're willing to pay anything just to get their money out of their country. So there's so much demand on multifamily specifically that the demand is outstripping the rising interest rates. Does that make sense? So in other words, we're not leading a progression of interest rates going up and cap rates going up. So Interest rates going up, cap rates are staying the same. Now, that won't go on forever. What I'm saying is, even if interest rates go up a little bit more, or even another percent, cap rates aren't, I don't think, going to jump substantially in the same way. They might jump a little bit higher. And here's the good news. So here's the thing: is first of all, you put that in your underwriting. Okay, if you're gonna sell in 5 years, then make your interest or refinancing or whatever, make your interest rates higher. Make your cap rate at least 0.5% higher at resale than it is right now. Build it into your underwriting. Make sure you have enough reserves in there. You don't ever want to run out of cash. Make sure you have long-term debt. Don't get a 3-year ARM like they did in the recession. Don't do that. Buy for cash flow. Don't buy for speculation. You do those things, you follow the system, you buy right, even if the crap hits the fan in 3 years or 2 years, you will be okay. Now, you might not make the same amount of money that you're projecting, but you're not going to lose it in a foreclosure, okay? Now, here's the good news about that. The opportunities is very, very high. Because of the uncertain stock market, people are ripe for looking for alternatives, okay? So you ask them, hey, how's the stock market treating you? Right? And you kind of smile and you let it rip. They're going to go, oh my gosh, you're not going to believe what happened 2000. I lost 15% of my net worth, 10% of my net worth. And you're like, you know what? Did you know there's other kinds of investments? And you're like, what do you mean there's other kinds of investments? Well, let me tell you about these multifamily syndications. The multifamily what? And now they're leaning in. Okay, they're leaning in like this. They're like, tell me more. And now you can tell them more about investing with you. It's a fabulous, fabulous time to get a multifamily, but you do have to stick to the rules. I see a lot of newbies that are getting into stuff. Maybe they have some money. They don't know how to underwrite deals, and they're just paying. They're overpaying. They're frankly just overpaying. And don't do that. Okay? Don't ever do that. So anyway, I hope it was a long-winded answer to your question. Hope that helped, though. How do you determine what market to invest in? Yeah, that's a great, great question. And we I don't know what chapter 5 I spend some time on that. There's a methodology we follow using a variety of free reports, and then a methodology to help you narrow that down. But the short answer is this: you're looking for markets that are stable or growing, okay, and that have some amount of acceptable cap rate. Okay, so for example, San Francisco is a great growing economy, but the cap rates are like 4.5%. So don't buy in San Francisco. But other cities like Memphis. Memphis is not growing very, very much, but they've been very, very stable over the last 15, 20 years. Indianapolis, Oklahoma City, Huntsville, Birmingham, Atlanta, but Atlanta is pretty hot. Dallas is really, really hot. It's hard to find deals there. So we're kind of buying these secondary markets that are towards the southeast or the middle of the country, that if you look at, they're not these giant cyclical markets. I avoid cyclical markets like the pest, because I have to be way too smart to time them. These markets are just kind of even keel, right? They don't really spike in hot markets. They don't really go down in recessions. They're just kind of even keel. Rents going up at 2-3%. And we look at like Memphis, for example, perfect example. The rents just were even for like 2.5 years. They never went down. They were just even. They didn't go up. So again, maybe I'm making a little less money. Now, I got to tell you a story. We have this 545 unit under contract, and we had the chance to be with one of the sellers. His name is Bill. He's like 81 years old. His hands are shaking a little bit. And we got to talking with Bill. Really nice guy. Really super experienced. He's a gazillionaire. He owns like 10,000 units. I said, Bill, how did you? And he went through the savings and loan crisis. And I said, how did you survive so low? How did you survive the last recession? And Bill's funny because he loves trading like options, like he sells puts in the marketplace and investing in stocks in his spare time, in addition to all the money he's getting from apartment buildings. And he goes on and on about how he had a 6% stop loss on the stocks. He was in cash, and then he started selling puts, and he went on for like 10 minutes. Finally, I said, Bill, okay, that's really fascinating, but how did all your apartment buildings fare in the recession? He's like, I don't remember. Like, it was a non-event. I was like, are you kidding me right now? That's amazing. That is just absolutely amazing. Mike, what's the current interest rate you recommend using today for underwriting? I would use for today 5.5%. Pretty good, 5.5%. Down payment. You know what? I would use 25%. And a lot of times you get better than that. That's what I kind of would use. So awesome. Hey, you guys, there's even over 100 of you guys on this call. So this is really great. I'm glad you're getting lots of your questions answered. But again, there's no way I can answer all your questions on this call. So if you actually want to do this yourself, then just go ahead and sign up. It's not too late. Though I'm not looking to sell, so I don't know if we sold a 10 yet or not. But go to michaelblank.com/deal2 and sign up. Even if you don't get the fast action bonus, come on, guys. Okay, it's a nice bonus, but that should not stop you. So make sure you sign up for this thing tonight. Go to michaelblank.com/deal2. New York City? No, we don't invest in New York City, David. Building apartments. Yeah, if you're into that kind of stuff. I don't have any experience with building stuff. But the problem with building is I had two problems with buildings or development. One, there's no cash flow for 3 years, and it's highly sensitive to the market. If we have a correction in 2 or 3 years, your development project is screwed. Now, that's what happened in the Great Recession. So the market's got to be timed pretty good, and I'm not that smart. So that's why I really don't love development. Edward, if I go into coaching with you or with your coaches, would you have brokers and property managers your group would already have? Yes, that's one of the benefits of the mentoring. We will either introduce you to the ones we have, or if not, we'll actually find them and introduce you to them. So that's again, it's a bit of a high touch thing. It's a pretty big investment. My gosh, if you want to set up a call with us, it's michaelblank.com/coaching. And you can set up a free strategy session, and you can explore whether coaching is right. It's the best out there. It is so cool. I'm so excited about what we do with it. But I'm not giving a commercial on this thing. I want you guys to focus. Focus. Again, you can always upgrade later, and you'll get the credit for the upgrade. So, Ed, if you're thinking about it, just sign up for this thing now, and then we'll upgrade you later on. Moshe, when you plan to do I'll answer your question, Moshe, since you already signed up. So, so when you plan to do renovations, do you also add the reserves, $250 per unit within summary? No, the $250 per unit is essentially my savings account while I own the property. It's for stuff I want to do 2, 3, 4, 5 years in the future, or for emergencies. The CapEx or renovations, I want to raise that money at closing. So it's on the summary tab. It's at the top for what is the daggone? What is the line? Hold on. Repairs and reserves, line 20. Okay, repairs and reserves. That's where you put that in. Okay, so if you have a CapEx, and let's say there's $3,000 per unit, and there's 100 units, you're going to put $360,000 of repairs and reserves in that line item. That increases. Right? So that's how that works. You guys have any other questions about the program? Anything that will help you? I know you guys are asking a lot of technical questions, which is really cool and groovy, but I want to help you make a decision right now. Again, there's going to be so many details unanswered that will all be answered in the course, but any questions you guys have that will help you make an educated decision about whether this is right for you, ask me those questions. Okay. I want to, again, I'm not a good sales guy. I want to just help you make a good decision right now. Finally, Ross, thank you. The question is this course all that's needed, or is it an upsell for coaching? Unfortunately, that is the norm. The course is all you need. Okay. The course is all you need. Clearly, I will invite you to coaching. The coaching, guys, is for people who can afford it, and who want to accelerate the timeline significantly. And frankly, who want to do a bunch of stuff done for them. Because there's a bunch of stuff. We'll do the website for you. We'll call brokers. We'll call property managers. You don't have to pay for deal desk calls. Like it's a high touch thing. Okay. If that's for you, you can accelerate the timeline. You can go bigger, faster. Again, there's an investment. But there are so many people, the vast majority of the deal desk calls are for people who bought this program. Okay. So love my coaching program, love it. But it's not like I'm withholding stuff. Well, if you really want to be successful, you got to sign up for mentoring. Okay. That's not what this is at all. That aggravates me, by the way. Any other questions like that, Ross? Thank you for that question. Let me know if that helps, if you have a follow-up question, because I want to help you guys make a good decision right now, because you don't have access to me like this tomorrow or the day after. Okay, it's just not. And one of the reasons I do it is because it gives us a forum to interact kind of alive. So I want you, especially if you're on the fence, to ask me questions that will help you make this decision. All right, I'll keep looking for the technical questions. Mike's asking. Thank you, Corey. I appreciate that. Yes, thank you for asking that question, Ross. Great question. What type of CapEx plan do you have for your 500 plus unit? Great question, Mike. There is no CapEx. And so what we did is we put $1,000 per unit in there, which is $500,000. And then we added 1 month of operating capital, which is $250,000. And so we have a $50,000 reserve in there. But what we discovered when we toured the property is that some of the comps have upgraded units. It would require about another 3,500 unit in upgrades. So new cabinets, new countertops, certain fixtures replaced, flooring replaced, that kind of stuff. And they're getting $100 more in rents. And that's very, very interesting to me. So we are redoing the underwriting for that. And so our CapEx plan is going to be, let's say $4,000 a unit times 500. It's a pretty big increment, but $100 an increase in rent is significant. So not only will the returns be higher, I suspect, I haven't seen the underwriting yet, but we'll have a much better product in 5 years. So really like that idea. Most lenders I've talked to want a balloon in 3 to 5 years, Daniel. How do you get them to do a 10 or longer balloon to help decrease risk? Yeah, don't do 3 to 5 years. I don't like that, Daniel. Don't like it. Find another lender. Okay. Even local and regional banks will give you a 10-year term. The amortization might be 20 years. Okay. Which means that your debt service is higher. If you're doing Fannie or Freddie, it'll be 30-year am and always a 10-year loan. And they'll actually give you the first 3 to 5 years interest only, which is really cool. Okay, that's really cool. But if you're talking to lenders who want a balloon 3 to 5, not in this environment. Nuh-uh. Maybe 5 years ago I would have done it. But in this environment, no way. I want 10 years. Jose's asking, can we get the price lowered if we have already purchased some of the bonuses that's included in this package? Like which ones, Jose? Which kind of bonuses? If you have the SDA, you'll get the $129 credit. If you have the Ultimate Guide course from a while back, if you just have the online course, there's a credit of $997 for that as well. So just contact support at themichaelblank.com, and Stephanie will do one of two things. She'll send you the link to get the credit. But what I would suggest right now is that you sign up at michaelblank.com/deal2. Sign up, pay the $1997 or $475, and then contact Stephanie, and then she will refund whatever credit you have. That's probably the cleanest way to do it, because the other one is a little complicated. And you know what? A confused mind says no, and I want to give you one less reason to say no. So that's what I recommend. You're welcome, Daniel. No problem. All right. What else we got here? I think we're winding down a little bit. Any other questions? Any other questions that will help you make a better decision right now? Sasha's asking, why wouldn't you invest in the property you just underwrote? I will invest in a property. It's a daggone good deal. This deal, by the way, is not yet open to investors. So if some of you guys on this call want to be passive investors, that's cool and groovy. But if I don't know you yet, I have to get to know you first. So you need to go to and register in our investor portal. Our investment company is called Nighthawk Equity. So you need to go to nighthawkequity.com. nighthawkequity.com and click join and get into our investor portal. That then will send you a link to another questionnaire. You got to fill that out, and then it prompts you to schedule a call with us, and you have to do that call. And then 30 days have to go by, and then I can show you a deal. That is if you are not accredited, okay? If you don't know what that means, you're probably not accredited. You have to go through that process. If you're accredited, you can bypass that process. But we still want to get to know you a little bit. So if you are accredited, we'll probably be ready to raise money in about 5-6 weeks in that property. But yes, Sasha, I will invest in that deal. It's a good one. All right, guys. Any other questions for you? We're winding up here. Really enjoyed it. I am so pleased that you guys have been on this call for almost 2 hours. Really had a lot of fun. And, I will really look forward to seeing a good number of you guys at the Financial Freedom Summit in end of January 25th, Washington, D.C. If I don't see you and you sign up, I will see you in October. We haven't set the date yet, but it's always going to be at the Hyatt in Reston, Virginia. It's a fantastic venue, and it's such a great event. It is, and you will see the people that come to that. I mean, you got to invest $2,000 to be at the event. Everyone is dead serious. I mean, dead serious. A lot of people have already done deals, and the networking is just fabulous. So, Daniel's got more questions. All right, so let's see. Yeah, I'll do another couple of questions, Daniel, and then we'll end the call here in about 5 minutes. It'll be I'm having trouble speaking right now. I'm literally feel my anyway. I hope that was cool. Daniel's hogging the questions. Biggest fear is not having all the money figured out before making an offer. How do you get over that? Don't want to be blacklisted by brokers because jumped the gun. No, it's a good thing, and this is why in the course I teach you to do things in parallel. I teach you to look for deals and to raise money in parallel. In an ideal world, Daniel, you will start raising money, looking for deals in day one, so that in 90 days you have a deal and you have verbal commitments from your investors, and you put the two together. That's ideal. Or in 6 months, or in 9 months, whatever the case may be. So that's ideal. Now, let's say you find a deal and it's too big. Then you bring it to us in a deal desk and we'll raise the money for you. If you're more successful in raising money, let's say you have $500,000 committed and you're like, my gosh, I can't find a daggone deal. Then you bring the money to us. Okay, we have this deal desk is actually part of a bigger joint venture program where if you have the ability to raise money for us, we will partner with you on that too. We'll make you a general partner. So you can be a deal finder, and you can partner with us, or you can be a money finder and you can partner with us. In fact, the next webinar we're doing in February 7th or 8th, it's a Thursday, 8 p.m. I'm going to talk about the 5 ways you can get started with apartment building investing. I'm going to go deep on this stuff. I'm going to show you exactly how we partner with people, how we do a joint venture and split the general partnership. It's so cool. Okay, so if you're more successful at raising money, then bring your investors to our general partnership. And in return, you'll become a general partner. So do it in parallel. And if one wins out, you capitalize on that. Jose, the dates of the Financial Freedom Summit are January 25th to 27th. That's when they are. And then the next one is probably going to be in October. I haven't said it yet, but it'll probably be towards the end of October is my guess. Ha! Sasha's asking another question. Let's see. Okay. Edward, get some water, pal. Good idea. Okay, Ed, here's for you. Well, okay, here's the thing. Why the calls? Oh, okay, she's not answering the phone, so I apologize for that. It is also a bit late. So she's probably not picking up the phone because she's probably helping people. So if you have an Edward, here's the thing. Okay, so you can get this program tomorrow. Yes, the answer is yes. You can get this program tomorrow. You probably won't get the loads of catering calls with me, but that's fine. You'll get this tomorrow. We're going to send you one email tomorrow just to remind you about this offer. Okay, so you can get it. You can get it tomorrow. So don't stress over it, Edward. And I did get my water. I am feeling better, but now my throat is a little bit sore. You know what I mean? I don't know if the water is going to help. So awesome. I appreciate it, Edward. Very nice. Okay, good. All right, guys. Let's see. One more question from Sasha. Henry. Okay, good. I want to make sure I'm getting the questions that help you make a better decision. The course outline is, well, it's basically the entire closing process for that 64 unit I just showed you, where we start with a 10-minute offer, and then we get it on. We do an LOI. We get it on a contract. You're going to be working out of a Dropbox directory, and you're going to be working in small groups together. And you're going to work with different scenarios. I'm going to throw some curveballs at you. Eventually, you're going to have to get it on a contract. Some things happen that will make things complicated. You're going to do a virtual tour of the property. You're going to do due diligence. You're going to discover things you don't like, how you deal with those. We're going to discuss how different groups deal with those things. You're going to go through the process of raising money. We're going to have an SEC attorney there. You're going to go through the process of getting the financing. We're going to have a lender there. And so then we're gonna show you the closing process, right? And so you're gonna experience within a day and a half exactly what it's like to go all the way through the entire process. The STA is not an online program, Henry. It is a spreadsheet. However, the instruction videos are online. That is correct. All right, awesome. Listen, it is at the top of the hour. It's 10 Eastern. I've been on this call for 2 hours. Really enjoyed this. I really enjoyed doing this. We started doing this. We want to try to do this monthly. If you, I think what I'd like to do is if you type in the chat box now before I let you guys go, what webinar topics you want me to talk on. So these have to be kind of meaty topics. I want something where I can really teach on for about 45 minutes. So these aren't short questions I can answer in 5 minutes. But we did raising money last month. We did analysis. Those are typically the two big ones. Type in the chat box, what webinar do you want to see that you would attend? Type that in the chat box, and I will take that under advisement. I'd like to do these monthly if possible. It's quite a bit of work, but I really enjoy them. And again, I want to make sure that I'm guiding you guys in your ability to make decisions for you and your family. So really appreciate it. Thank you so much for being on the call. So many of you really appreciate it. Thank you so much for being on this call. Thank you for all your questions and the feedback. And for those of you who sign up, welcome aboard. Look forward to seeing you at the Financial Freedom Summit. And if you didn't sign up, that's okay. I will look forward to staying connected. So with that, I will end the call. Good night and see you next time.